Anyone who's bought a 2x4 lately knows that inflation is here. And so what I thought I'd talk about is what is inflation and how you can be investing in an inflationary environment. And so what is inflation? It's the cost of our goods going up. So they're rising up. So, a head of lettuce was $1 last year, it's $1.25. Like it's going, cost of goods are going up. And so that just means our money is worth less. And so the government of Canada, on the Bank of Canada, I should say, the Bank of Canada's website, it actually says, our mission is to preserve the value of the Canadian dollar by keeping inflation rates low. So that's what they're going to do. And so we have really low interest rates right now, but if inflation starts to go up, the bank on their website says, hey, we're going to try to bring inflation down. And we saw this in the 70s with them really increasing interest rates. And so that's one thing that we could see happening is interest rates going up because inflation's going up. And what else happens? So if you're investing, you got two different ways really. You got bonds and you got stocks. And so let's talk about bonds. Bonds and interest rates are kind of like a teeter-totter. So if you have bonds that are worth $1 million today and interest rates go up, generally the bonds will go down, the value of the bonds will go down. And so investing in bonds can be a little bit tricky in an inflation environment. So strategies around that would be getting shorter term bonds. So don't going out 30 years, maybe stick a little bit short term. The rates are a little bit less. Maybe you go to a different country. So Canada is going to be experiencing inflation, you think? Maybe you go to a different country that has lower inflation. And there are these bonds called real return bonds. So what happens with them is what you're receiving from the bond and the price of the bond will actually go up if inflation goes up. It's kind of tied to the consumer price index. So those are really popular as well. And now let's talk about stocks. Equities, owning assets generally do better in an inflationary environment or will fare better, but there's more risk with them, right? You've got more ups and downs. And so they can pass on some of their costs to the consumer. So what kind of areas should you be investing in? Exposure to commodities and natural resources, so like gold, something that has exposure to that. You see the price of copper is going up right now, so companies that have exposure to that tend to do a little bit better in an inflationary environment. Real property, so if you're owning land and rentals, things like that, and you say, hey, I'm too busy, I don't want to manage a rental, I don't want to manage an apartment building, then we'd be looking at real estate investment trusts, and that's an area that you'd be wanting to look at, and those are, you're buying a company that has a whole bunch of properties under it. And so they're able to pass along the rising cost of goods to their tenants. Business that generate cash. So if you're like a new business and you're burning through cash, well, you're going to burn through that cash a lot quicker if prices are going up versus an established business. So you might be looking at our telecommunications companies like TELUS and Bell and some companies like that, the banks. They're established businesses. They're not burning through a lot of their cash. They're generating cash. And then businesses that are scalable so that they can really increase their business. So some technology companies might be there that are profitable. So that's kind of some of the areas you might want to be looking at. I want to cover hyperinflation. Hyperinflation is really bad because prices start to really go up. The government really has to increase interest rates. It kills innovation and things like that, and it kills investment, I should say. And so we've seen it in some countries like Venezuela where just like prices just go up and it just really hurts their economy. So that's what we really want to avoid is hyperinflation. I think the government's going to be sticking to their mandate. So if you're a client of mine and you enjoyed that, please share it with someone you think would benefit from it. And if you're not a client of mine and you would like to get some more information about investing in an inflationary environment, please reach out to me through LinkedIn, Facebook, Instagram. I would love to connect with you. I've got a great quote from you from Benjamin Graham, and prices are what you pay, value is what you get. Have a great day.